Wanting to get out a national market update that I like to do for our company and for our clients each month. This is where we focus on more of the nationwide things we're seeing versus just Athens market, which is what we do at the beginning of each month. One of the big trends we're talking about right now are price and listings. And basically, we've seen prices go up so fast that it scared people. And we're actually think we're going to see something now that is a good thing, that maybe this appreciation rate is going to slow down. And that's the big difference here that I want to talk about is this is not talking about depreciating property. It's talking about the amount of appreciation each year slowing down. So if you're looking here, these people have been looking at, you've got the Federal Housing Finance saying 19.2, CoreLogic 18%, and then S&P 19.7%. And apologies as the phone rings in the background. I guess someone stepped out, but we can't get it answered. This is a map of appreciation across the country. And as you can see, this is really large yearly appreciation year over year. You know, we used to see 3 to 5%. We thought that was great. And now we're talking 16.7 in Georgia. Look at this, 20% in Oregon. I'll move here. California at 20, 16% in Texas. So, and almost 20% in Florida. So this has been one of the things we've seen is these values go up so quickly. So what we're going to see, and what we've seen some people project, is that that amount of appreciation per year might slow down a little bit, which is a good thing for us. Closings are set to decline a little bit, about 10% from 2021. And the home appreciation is on the cusp of a decelerating trend. Now, that was from Zelman Associates, Ivy Zelman. And that's one of those quotes when you hear the word decelerating, it's like, oh, well, here we go. It's over. And I understand sometimes I feel like there's people that are rooting for that to happen. But what that means is that it's not going to be appreciating as fast. So here's an estimated home price performance. And as you look, 2021, it's a little over 11%. And then as we come into 2022, almost 6%. And then look at these normal levels. 2023, hey, as a real estate broker, that's not a bad sign to me. I think that's great because a good, healthy market does not jump up 20% each year. So this is a great sign. But what it ought to tell you is homes are not going to be becoming less or more affordable by decelerating prices, depreciation prices, just a different market. Expected home value change is still over the next 4 years expected to be up 31%, but the annual year-over-year growth will let's be going down. So you can see 11.7 to now almost 6%. And then what about the last quarter of the year? Let's take a look at that. Fall is usually the start of the slower season for the housing market, but nothing is usual in today's market. Potential home buyers are seeing a slight rise in inventory and consequently rushing back into the fray. Important to note here, mortgage applications for the purchase of a home jumped 7% for the previous week. That is the highest level since April of last year. That's from CNBC's real estate correspondent. This is a look at the last 3 years. I do a very similar graph when I do this for the Athens area. And let's look here. The green is 2021. That's this year. That orange is 2020. And the blue is 2019, 2019 representing a normal market. You can see the V that we had here in 2020. And then 2021 has operated above it for most of the time. So this is what we're talking about, difficult to forecast. They don't know, are we going to continue straight or are we going to fall off a little bit? And the reality is, even if you fall off a little bit, look how much you came up in 2020. So you're still going to be far ahead of 2019. And now we're just comparing that to 2020, which we saw this lagged below and then we shot back up. So really this whole year has maintained until just now above those levels because we saw a record fall last year. And in reality, we're still beating 2019 with all this activity. So we want to make sure we keep things in perspective and understand that the market's performing still really well, where people are comparing last fall to this fall. And as I've said a lot, I don't think you can compare anything about 2020 to and the years moving forward. Existing home sales, December numbers for each year. If you look here, in 2017, you saw almost 6 million homes sell in 2017, a little over 5 million in 2019. So those were really historic years. So if we're even close to that, that's really strong. But a reasonable expectation would be to be below that number. There's a line just sort of justifying what I said there. As you can see, 2019, 2 years ago, was a really high record year for this. And back to alluding to how it's difficult to forecast, we don't really know because, you know, it's really going to depend on the listings and basically heading into the year. If people recognizes that the values are still going to be going up. We might see more people stay in the market here towards the end of the year. Now, monthly listing counts. As you can look, the gray here is 2019, and then we got the green, 2017, and of course the blue in 2018. Those are normal years, and the listings always go down. So if we see some listings go down, that's trending normally, but how is that going to impact our market? That's something I'm going to pay attention to very heavily in our local forecast and when I take a look at those. And basically, you've seen that the monthly listings have gone down since April of 2020. That's one of the things that's been driving such our supply and demand problems. And let's just skip a few of these, as I don't want to be too far into this one. Let's see. When will listings peak in 2021? Well, as you can see, that 2020, the listings went down the entire year. Then we started very low, and we started to come up a little bit here in August, but we were always below where we were before. So trying to project where we're going to peak is a little bit difficult. And that's what's going to tell the story here. Is it going to be, going up with listings, which I'm sort of hopeful for? I think more listings would be a good thing. Flattening out. I don't want to see them go down, because if they go down, I think that's going to be a problem. I think we're going to see a number 2 or number 3. One of the last things I want to get up to is 3 reasons why listings may continue to increase throughout the fall. There's a pent-up demand where people are feeling more comfortable to put their house on the market. Number 2, a little bit of new construction starting to take off. Maybe not in this market, maybe in other markets around the country, but I don't know that that's the case here in Athens and Watkinsville. And the end of forbearance will create new listings. Regardless of if somebody's in forbearance, it doesn't mean it's going to be a foreclosure. A lot of these people have a lot of equity. It means they can sell their house. So that might create some new listings as well, but nothing like we saw before in 2008, 2009. The bigger story I got to finish on is interest rates. So I always try to move through this one fast because it can be a lot to digest. The single biggest risk to the housing market by Ali Wolf is interest rates, and the real possibility of those interest rates rising. And as you can see, here's the historic trend of the interest rates from 2020 to today. We fell all the way down to below 2.7, and then they came back up for a while in April to almost 3.3. Woo, terrible. And then they fell back down again, and now we're at about 3% rate. We all know that inflation's going on. Doesn't matter what your political thoughts are. If it's who's to blame, it's happening, and it's a problem. So interest rates are going to have to go up, but how far up can they really go? Many factors have led to the increase, but there are some projections that people are saying for next year. So that's one of the things I want you to take a look at if you're considering a home purchase. Look at these interest rates. 3.3 is projected, 3.3 by the first quarter, and then almost 3.5. Now in 2022, that's still a great interest rate, 3.5, but that's a little bit of, that's almost a full point from 2.7 where some people were saying. That might cool our appreciation, but it won't turn it backwards. But it also might cost you money if you're sitting on the sidelines too long. Now, that's what we're actually looking at here for interest rates. We'll show you from 2018 and then the projection. So if you see up here to almost 5% not long ago for some interest rates, and then we have fallen all the way down here. What they do think is we're going to see a little bit of a step up in 2022, getting closer to 4%, around 3.7. So the thing I want to leave you with here is understand that we might be seeing some good things in the market for home buyers. What that means is we're going to hopefully see things stay strong, but cool off. Instead of 20%, maybe we're going to see 11%. And then after that 11%, we might see 5% appreciation. With a little bit of luck, we might see a few more listings come to market, and that'll be good for home buyers. And then the next thing is an increase in interest rates is coming. It's just a matter of how much. So we expect that to be a little bit north of 3. It's not my personal projection, but it's a lot of our resources here at Keeping Current Matters. Got it done in 10 minutes. Hopefully this was good information to give you some thoughts if you're planning ahead for next year or the end of this year. Always reach out, connect with somebody here at 5mrealty.com if you've got questions, and look forward to having a great fall. Reach out if you need help. Thanks.